So when thinking about making a charitable donation, I counsel clients on a few things. Number one is to first, well, obviously you're going to want to donate to a cause you believe in. I always suggest that they should check whether it's a valid, and a recognized exempt organization according to the IRS. So if you go to irs.gov website and you search by exempt organizations, there's a utility that the IRS provides where you can search and see if the organization is valid and can receive tax deductible donations, right? So that's number one. Number two, you want to make sure that when you give donation of more than $250, you need to get a receipt. You need to get a written confirmation from the charity that you've made this donation for you to be able to deduct that. Number three, if you really want to do a little bit of due diligence, you could check out their website. You can even check out their tax return. It's an information return, 990 return that's filed with the IRS. What you're trying to ascertain is how much of the money you donate actually goes towards the cause and how much of it is for administrative and overhead purposes, right? You want to make sure that a good charity would generally have maybe 80 cents or higher per each dollar that goes into its program services, if you would, their exempt purpose, if you would. The other thing is that there's all kinds of planning you can do around donations, depending on your own tax projections, depending on whether, if you're an alternative minimum tax situation for this year, let's say, that means your itemized deductions are higher relative to your income this year. So maybe you want to defer the donation till early next year. So you definitely would want to seek counsel from your tax advisor. The other thing is donating appreciated assets. For example, let's say I bought an asset for $10,000 and today it's worth $50,000. And I verify that through a written appraisal. I actually get an appraisal on that for $50,000. I can donate that to a valid organization and I can deduct its fair market value, $50,000, so to speak. So there's a lot of planning that goes around it. You want to make sure you're checking that it is going to a valid charity. You want to make sure that most of it, if not all, substantially all of it, will be used for the charitable purpose, for the cause that you're giving it for. You can do some planning around it, which period, which year you donate, and at the same time you can also do some planning if you want to, in case you want to donate some appreciated property. And sometimes people want to donate appreciated properties as stocks and other investments or pieces of art or things of that nature.